Okay guys, in this video, what I want to do is I want to expand upon that accounting equation, looking at our accounting equation. The basic accounting equation is that assets equals liabilities plus owner's equity. Assets are resources. These are the resources of the company. We either own them or we own them. We either own them or we control them. These are the resources of the company. And I gave an example of buying a house, and the house cost $150,000, and you put down $15,000. That was your down payment. And then we went to a bank and we borrowed $135,000 that we borrowed. I want you to see that this borrowed is that right there. So our liabilities are $135,000. This number, let me get a different pen here. This number is our assets, so $150,000. This number down here, different color pen. How do you like this? Fancy technology. This number here is our owner's equity. So we find that this accounting equation balances. 135 plus 15 equals 150. Now, what I want to do is I want to show you that there's a link between, this is going to be Pen Central, because I'm going to use a different color now. There's a link between what happens here and what happens over here in our income statement. I just want to make sure that everybody understands this because it can be confusing. The income statement is different than the balance sheet. This right here is our balance sheet. Assets equals liabilities plus owner's equity. The balance sheet shows the financial position of a company, of an entity, of an individual. It shows the financial position at a given point in time. You take a snapshot at a point in time. All the assets the company owns or a person owns, the liabilities, which are claims against those assets, or owner's equity, which means those assets are owned by the entity, by the company, by the individual. All the assets, they're either claimed by creditors or they're owned by the owner of the assets. The income statement is different because the income statement now is the results of operating, where we have sales, whatever it is that we're selling, less cost of goods that we're selling, less our operating expenses, equals some kind of net income, net figure, net income. So let's say we're selling sneakers. We're in the sneaker selling business, and we've sold in the 1 month, let's say this is the month of January. We sold $10,000 worth of sneakers, but we had to buy the sneakers that we were selling. So let's say it cost us $6,000 to buy those sneakers. So $10,000 minus $6,000 would give us a gross profit of $4,000, which I'm not going to put here because I don't have gross profit there. But just say $10,000 minus $6,000 was our profit on the sneakers. And the operating expenses, we had to hire 2 people and the owner of the company. And let's just say all of that cost us, plus rent, plus everything else, let's just say that cost us $2,000. And if we were to subtract 10 minus 6 minus 2, we would get what? $2,000. Now what happens at the end of this month of January? I get another color pen to make it really fancy. This $2,000 goes where? The answer is right here. It goes into owner's equity. Owner's equity goes up. Owner's equity goes down. It's not a static number. It changes based upon the operating of the business, whatever business we're in. And for my examples, I'm using a sneaker selling business. So as a result of 1 month's activity, that $2,000, there's a link between the income statement, which is also called the profit and loss statement, P&L, profit and loss statement. I want you to see if there's a link between this number and the balance sheet. So that's the only purpose of this video, is to review the accounting equation, and then to understand that the accounting equation does not operate in a vacuum. It doesn't just stay put. It changes. There's a dynamic element to it. And the most influential dynamic against it is what happens in the income statement, what happens in the P&L, what happens as a result of actually operating the business that we're operating. So hopefully that clears up some things that may or may not have been cloudy. See you in the next video.